One of the biggest problems with cryptocurrencies is their rampant price volatility. You guys might have remembered earlier on in the year when the Chinese authorities started cracking down on crypto again, and that led to a huge decline in crypto prices. Now, if you're a little bit on the edge with this volatility in crypto and want to be a little bit safer, then stablecoins might be a perfect place to park your funds. But the question is, should you choose USDT, BUSD, or another stablecoin? And what the heck are stablecoins in the first place? You might also be wondering how the heck you can earn money while holding stablecoins. In this video, I'm going to cover all these topics and more, so stay tuned. As always, guys, this is not financial advice, and I'm not a financial advisor, so you should always do your own research before doing anything and following anybody's advice, including some random internet stranger you found on YouTube. So let's continue on. First of all, what the heck are stablecoins? As the name suggests, stablecoins are a digital currency that are pretty stable in value. That means their price remains pretty constant. This is done by backing it up with an asset such as the US dollar itself. Now, there are actually three main types of stablecoins. The most common one are fiat-backed stablecoins, which are backed to commonly the US dollar. There's cryptocurrency-backed stablecoins and commodity-backed stablecoins as well. For example, if you have 200 USDT, which is a fiat-backed stablecoin, you can easily convert them into around $200 without having to wait for the perfect time for it to settle at a price, because it's designed to remain at basically around $1. This makes investors feel a little bit more secure in the world of crypto where things can be a little more unsecure. Now let's dive a little bit more into these different types of stablecoins. Fiat-backed stablecoins have fiat currency backing them up, like I mentioned earlier, like the US dollar or even British pound. One very popular example is the stablecoin Tether, USDT. Tether is pegged 1-to-1 to the US dollar. For every USDT, there is a US dollar or its cash-backed equivalent in its reserve. Or at least there's supposed to be. I'll talk more about that later. Another example of a fiat-backed stablecoin is USDC, which is managed by Circle and Coinbase. Fiat-backed coins can be converted into liquid cash easily, but there's also a risk associated with it. Just like fiat, there is a central authority trusted by all investors controlling the number of stablecoins minted and the supply of fiat and the reserves against it. This actually goes against the concept of decentralization. Next up, we have crypto-backed stablecoins. Crypto-backed stablecoins are stabilized with the help of a lot of external market factors. All these factors blend to stabilize a currency's value, which may end up confusing the average investor if they try to look at trends and make financial decisions accordingly. A prime example of a crypto-backed stablecoin is DAI from MakerDAO. Here, Maker is a smart contract platform that uses the Ethereum network as its base. Basically, DAI collateralizes and stabilizes the value of DAI by constantly investing and pulling funds out. The currency tries to maintain a value equal to that of the US dollar. The investors are allowed to use their Ethereum assets to farm DAI on the platform without having to deal with an intermediary, hence the completely decentralized nature. And finally, there's commodity-backed stablecoins. These are stablecoins backed by precious metals and commodities like gold, silver, platinum, oil, gas, sugar, cotton, you name it. This gives them a much higher degree of stability. The most common commodity-backed stablecoins out there include Tether Gold and Paxos Gold. These coins are much more reliable since you actually purchase a bit of gold with each coin. However, their price does fluctuate as well since the commodity prices also increase and decrease in price. So next up is how the heck can you earn money with stablecoins? Well, first of all, you can buy a commodity-backed stablecoin like Paxos Gold and then earn money by holding onto that gold. For example, if you do buy the Paxos Gold token and the price of gold goes up, the Paxos token will go up as well. So you'll essentially be earning based on the price increase. You can also earn interest on your stablecoins by lending them to a platform such as on BlockFi, Celsius Network, Kraken, Coinbase, and much more. There's also a risk involved in some lending platforms, and if you're wondering what the best lending platform is, I'll leave a link in the description below where you can check out a video I made on BlockFi versus Celsius. You can also stick your coins into a yield farm. The rate of yield farm percentage that you can earn depends anywhere from like 5% all the way up to 30% and above. That's also highly dependent on which yield farming project you stake your coins into, but you can earn based on just stablecoins alone. If you're wondering what the best stablecoin yield farms are, I'll also leave a link in the description where I made another video where you can check it out yourself. Now on to the main points of this video. What are the best stablecoins out there? First, let's cover the famous USDT or Tether. Tether, also known as USDT, is one of the most traded cryptocurrencies out there. It's the most popular one for sure. It was founded in 2014, and the goal was to provide a cryptocurrency that offers price stability to investors. It was founded by three guys, Brock Pierce, Reeve Collins, and Craig Sellers. Before you actually dive into USDT, however, there have been quite a few controversies regarding this token. A big problem with Tether was that it was found to be a very centralized currency system with a misappropriation of funds. Basically, a lawsuit was filed against Tether where the Attorney General of New York suggested that it doesn't have enough assets to back the stablecoins issued. That's a big problem. The auditor's report showed that on February 28th of 2021, Tether's assets accounted to $35.2 billion against liabilities of the stablecoin issuance at $35.1 billion. So they did have enough assets to cover the amounts that they have. After the settlement, Tether was supposed to provide more transparency in terms of its assets against the liabilities. However, if you take a look at their audit reports, they report to have 3.87% as cash. The rest are actually investing in. So this could be a little bit of a danger in the long term, as they might not have enough money to back up their stablecoins issued if the price of their investment somehow goes wonky. As you can see on this coin market cap list, the market cap of Tether is over $68 billion. That's way more than USDC, BUSD, DAI, USDT, etc. combined. However, due to USDT's past history with all of its scandals and the lack of clear transparency with USDT, I'm going to have to give this coin a 3.8 out of 5 rating. The next coin I'm going to cover is USD Coin. USD Coin was founded by Center and Circle and has been particularly successful in terms of the versatility and features it offers. As you can see in the chart that I mentioned earlier, this is actually the second highest market cap stablecoin on this list. This collateral-based currency was first announced on May 15, 2018 and launched in September of the same year. Circle and all its ventures have always received glowing recommendations and attestation reports from independent auditing firms, in strict contrast to USDT, its direct competitor. According to the latest audit report, the reported balance of Circle's bank account was $1,873,162,240, while the total USDC minted to date was a bit smaller than that. So the documents presented upon request were indeed accurate according to Grant Thornton, their auditing firm. Because of USDC's clearer transparency, I'm going to have to give this one a 4.5 out of 5. Now, the next popular stablecoin is BUSD. This coin was launched in September 2019 and issued by Paxos, a financial institution based in New York. Paxos also has another coin, Paxos Coin, which is also backed by the US dollar. However, BUSD is branded by Binance, and the coin is basically managed by Paxos. Everyone Binance USD is backed by a single USD held in Paxos-owned US bank accounts. BUSD is also regularly audited to contribute towards a more stable currency and has very good liquidity pairs with over 90 pairs on Binance's exchange. Because of its transparency, I'm also going to have to give BUSD a 4.5 out of 5. And the last one I'm going to cover is DAI. DAI is a foreign cryptocurrency whose value fluctuates slightly but remains around the dollar mark. Now, it's going to be a little bit more volatile than the other cryptocurrencies because it is backed by other cryptocurrencies, which are inherently volatile in nature as well. Now, DAI is backed by a variety of cryptocurrencies, which includes some of the stablecoins I mentioned earlier. So keep that in mind. It was founded by Danish entrepreneur Rune Christensen in 2014. And it was officially launched to the public on the Ethereum network on December 18 of 2017. DAI is very important because it's actually the only stablecoin on this list that I mentioned that's not actually centralized. Yes, it's entirely run on the smart contract. That also means that it can be subject to some risk. For example, there were some audit reports on DAI, and there were some security issues found. So keep that in mind whenever you're investing in any smart contract project. So I hope you guys learned a little bit about some stable coins on this list. And you also might want to keep in mind that there are points for failure whenever you're using these stable coins. For example, if you are using the USDT coin, then you have the risk of Tether losing its peg of $1. If you're using the USDC coin, then you have the risk of USDC losing its peg or the exchange Coinbase blowing out. You also have the risk of Coinbase blowing up because if their exchange goes down, then it's likely that the USDC coin will lose its peg as well. Or if anything bad happens with the Circle company, then something bad might happen to USDC coin as well. You also have the risk of whatever yield farming project you're staking in going bad. For example, if you're in the PancakeSwap farm and you're staking USDC, if something happens to PancakeSwap, then the price of your token doesn't really matter because it's going to be gone. And another risk is the chain you're on. For example, if you're on the Ethereum network, that's been pretty secure, but what about the Binance Smart Chain network? If there's a big problem with the Binance Smart Chain network and you have your USDC on there, then basically your USDC is prone to that risk as well. So always keep these risks in mind because anything in crypto is not entirely safe. There's always that risk to earn nice APR with stablecoins. So anyway, guys, that's a little bit about stablecoins. Let me know your comments about stablecoins, what you think is the best stablecoin to park your funds in, and anything else I might have missed in this video. If you want to continue the further discussion, please join us over on our Telegram group at RugDoc, which I will leave in the description below, where you can join our amazing community and talk to your heart's content. As always, guys, stay safe in the DeFi space and have an amazing day.